Hi guys, good afternoon. Right now it's about 1:18 p.m. and today is 8th of May 2018. So how are you guys? What's going on? How is your trading? I'm hoping that you all are doing well. So I thought, let's talk about today a trading strategy in Nifty, right? So see, since morning Nifty opened gap up and it was just experiencing a resistance. So let me just put a 15 minutes graph. It's experiencing a resistance, right? It opened gap up and from there the Nifty has come down. It has come down quite nicely, right? Just see here. Now, an entire, like starting from about from 9:30 till about 12:30, which is full 3 hours, it was in a range. It was not being able to cross this range, and then suddenly a fall came and Nifty has gone down from say about 10,750. It reached bottom of 10,700. Good, about 50-point drop came suddenly. Now wait for Nifty to take a support. Right now I'm going to teach you today another way of trading in Nifty, and that is using Bollinger Bands. So when we are going to be using Bollinger Bands, make the time frame as 5 minutes and simply go to the studies and put the Bollinger Bands. Right? Just take the default parameters, don't need to change anything. Now let me explain you what happens in, there are many things that I do with the Bollinger Bands, but some of the things that I can explain you is this particular area, like you can see this particular area, wherever the narrow portion comes up, it's called a squeeze, right? Narrow portion is basically called a squeeze, means if any index or price is basically squeezed, like there's a pressure from the buyers and the seller, both the sides. Market is trying to take a direction, right? See over here, this is called a squeeze, right? Whenever the you know the moving average and the standard deviations come very close to each other, that particular part, I'm not explaining what is, you can see this middle part is basically the moving average. This you know the one I'm highlighting right now is a 20 moving average, and the ones you see here are the standard deviation, right? So whenever the standard deviation comes very close to the moving average, means there is a volatility is less, right? Market is less volatile. Market is planning to take a decision, and that decision could be in either of the direction. Market may go up, market may go down. So how do you trade in such a situation? You put a line whenever the, let me take up a pen and then I'll mark a line, and then from there, let's see here, this is the squeeze, right? What you do now, mark a line, mark its boundaries, right? Mark this boundary of this. So this is top boundary and this is the bottom boundary. You can see that I've put two lines. Now whichever direction this line is broken, market will go in that direction, right? So you can see it didn't go up and it has broken in the downward direction. Let me make it bigger. Then I'll have to remove this drawing, right? So see here, I've put these two lines. This is the upper boundary, this is the lower boundary. Whichever direction the index or the stock breaks it, that direction the momentum will come. What will be your stop loss? This high point, you can see above, this will be your stop loss, right? In other words, how much should be your stop loss? It should be about, if we are shorting from here, which is 10,665, our stop loss will be roughly about at 10,681. As a general rule, I keep a range of stop loss about 30 points in Nifty. So this is within the range of 30 points. So I'm going to keep the stop loss at this particular candle, the high of this particular candle, right? This candle that you can see, I'm going to keep the high of that, which is 10,680 as my stop loss, and I'm going to have a target. I mean, at least 30 to 35 points will be my target. So this is the point where I'm going to be creating my position on sell side. and it market went down, then it went up again from the same point, took a resistance and further went down, right? So Bollinger Bands give you a good entry and good exit point. Now that was when the squeeze was happening. Now let's say I want to show you one more. This is 5 minutes graph. I will show you another entry point, right? How I do take an entry. Now see, whenever market has, like, let's say this situation out here, right? This is a situation where the squeeze is happening, right? So let me again draw a line. This is how the squeeze is happening, right? This is the squeeze that's happening. I've taken the high point of this line and the low point of this line, and now what will happen the moment this line is broken? Let me just take a different color line. Probably that will make more sense. I'm going to take a red color line, or maybe I'll take a different color line here. So this is how you have one end, one boundary. This is the other boundary. Whichever direction it's broken, that direction market will go, or the Nifty will go. So the moment it breaks this line, which is 10,740, you can sell it. And what will be your stop loss? The top of this line, which is 10,753. That means good about 15 points is going to be your stop loss, right? Which is pretty decent stop loss. My range is about 30 points. Now market came down and Nifty came down, and see there is a 200 moving on average over here, and it's tried to take a bounce from here. Now if I want to enter, how do I enter into it? Can you see this candle outside, standalone candle outside? This shows me that the Nifty is planning to bounce back from here. Okay, the market has become oversold, and from there, whenever the candle will leave the moving average, that's when I will be entering into it, right? I've created a buy position. I've bought it 11,000 call at some 33 rupees or so. So let's see how it goes. Maybe 2-3 points or 4 points I'll take an exit from here. So entry you will do whenever there's a squeeze that's taking place. There are many ways to take entry, but I'm giving you one example. So whenever there is a squeeze taking place in a Bollinger Band, right? What do you mean by squeeze? When there is a, see, let me just take you, there's a bubble which forms, and after that after the bubble formation there's a bloating that happens. So here there's a narrow portion. After that the bubble formed, it went up and it went down. This bloating in the upper side is very, very important. It should not be flat. And then see how it went down massively. Bloating in the upward direction as well as in the downward direction will give you a good trade. Okay, so entry from the Bollinger Squeeze in this buy or the sell side, and when you want to exit your trade, look out for a standalone candle outside the band, right? That is your exit. So if you've shorted here, if you've shorted at this point, which is 10,740 with a stop loss of 10,753, your target will be this candle, this tiny candle. It's as it is a doji. Doji means indecisiveness in the market. This candle, right? That means the moment this candle completes 10,710 is going to be your buy back opportunity, right? How many points do you get? Roughly about 30-35 points. So this is how you can take entry and exit based on Bollinger Bands. So hope I have made sense. You can, let me just reiterate the whole strategy. You're going to take the 5 minutes time frame and you will look for the squeeze. Squeeze means price movement should not be much. And put the lines, put an upper line, put a lower line, whichever direction the line is broken, take entry in that direction and keep the other line as your stop loss. So if you are entering over here at this point, if you take an entry, if you're taking entry at this point, your SL will be this upper part of this line. And what will be your target? That I have told you. You have moving averages, you have a standalone candle outside bands, right? That could also be your possible. That is when you get to see that the market is now oversold. So the moment this converts into, the candle goes above the band, that is when you can take an entry. So your entry starts from 10,714. These are all intraday trades of Nifty. Please remember that. These are not for long-term positions. These are intraday trades. Get quick money, quick points, and exit your trade. Get quick points and exit your trade, right? So you can do such similar trades wherever. See here, there's a squeeze out here. So you put a boundary, right? You put a boundary, and then what you do, you can, this is your stop loss. 10,679 is your stop loss. You will sell from here 10,666 and see where it has come down to. It has come down to 10,641, right? So you have got good about 25 points here, right? So these are quite good strategies, but then you need to do a lot more other things. See it's here, bullish engulfing candle, tweezer bottom, and then you can see the stochastic, various other things you can combine and you can exit your trade. All right. So Bollinger Bands is again, a good opportunity for you to take entry and exit. I do trade sometime, using Bollinger Bands, but whenever the tunnel becomes long, right? Whenever the tunnel is long, please don't create any position. It simply means indecisiveness, right? But if the tunnel is short, like if this tunnel that you see here, if this tunnel is short and suddenly a bloating takes place, a bubble bloats in the downward direction as well as in the upward direction, you have a good opportunity for entry, right? So look for such opportunities. Stock market means wait for opportunity and then take an entry. Wait for opportunity and then take an entry, right? That is how one need to create positions. All right. So in my other account, as I was telling you, I still have HEG. Now my profit in that is 10,000. This I created about, I think about a couple of weeks back. I've bought HEG 90 stocks. I keep trading in HEG because this gives me pretty good profit. So today, in today's date, the profit is about 10,000 rupees. So I'll just see, because I saw huge selling coming in today, and then it suddenly bounced back from there. So that means the stock has pretty good strength. It doesn't plan to fall down. Look at it. Can you see the price rejection at the lower level? It indicates that the stock is planning to go up. It's honoring this support which is there in the form of pivot point. So I'm still holding my position here, and I'll see to it when the time will come. I mean, I'm monitoring it on a regular basis. Somebody has asked me, how do you filter out the stocks? How do you go through all these stocks every day? So no, I don't go through all the stocks every day. What I really do is I filter them out. I have certain criteria by which I filter out, and I filter them out, and I have a list of fundamentally very, very strong stocks. So if I get some good fundamentally strong stocks fitting in my criteria and about to give me a breakout, I create position in them. Like this is one, and another stock that I've given to, about a few days back to my, on my channel was Pfizer. So look at Pfizer. What did it do yesterday? Just a vertical candle, just a huge. We bought it at somewhere around 2290, and yesterday it touched 2537. Good, about 15% profit in one single day. So I don't, the way I trade in these stocks is basically I have a list of fundamentally strong stocks and I filter them out with a certain criteria. I don't see them every day. There are about 150 odd stocks that I have on my list, and so I keep waiting for them to give me a breakout. So whenever the breakout comes, I create position in them. So that is how I trade. I mean, I don't trade to filter, and there are filters, that filters give me out of so many thousands of stock, I get just about 5-6 stocks. Then I have my criteria of selecting them, and then I create my position. So this is how I create my position. So I hope I have answered your question, but I'm suggesting you to also try Bollinger Bands and time intraday for intraday, right? And particularly for Nifty, you will get pretty good trades. As I showed you today, you can, this is Pfizer, but you can go to Nifty future, and from there you can find out good trades. Look for the narrow portions, look for the portions where the squeeze is taking place, and mark the boundaries, and whichever direction the boundaries are broken, enter in that particular direction with the other boundary as your stop loss, right? Other boundary your stop loss, and then you can hold your position. And now when you want to exit, look for a standalone candle. Like if I entered from here, look for a standalone candle which is not within the band, which is not within the Bollinger band, which is standing outside the Bollinger band. And then whenever the after that, that means this indicates oversold position, oversold nature of the stock. So the moment the candle goes within the body of the band, you can go for a long position. But of course, I do combine a lot of other criteria and then create a buy position. So with this, I'm signing off, guys. All the best. You can join, like many people have joined my Nifty course, and I'm 100% sure they are all benefiting. And as far as my webinar members are concerned, I'm going to have a recap with you guys very soon. Just give me 2-3 more days, and we'll be starting with the recap. I'll update you with the latest technique of filtering out the stocks, and you will be able to find out the stocks that I have given you. That we trade, like how I find Pfizer or how do I find HEG and all these stocks. I'll be giving you my update with my updated research. So with this, I'm signing off. We'll meet tomorrow again. Good day. Bye bye.